Okay, Matt Davio here today with Todd Miller. Todd is the principal and founder of Availeth Capital. How did I do on the name there, Todd?
You did great. You did great.
So Availeth Capital LLC, which is a CTA, for those that don't know, commodity trading advisor. You're based in the lower Midwest, I'd say, Cincinnati, right on the border there. Actually, the Cincinnati airport's just south of you in Kentucky. So,
exactly.
How you doing today, Todd?
Doing great. Doing fantastic. If we can get a hang on these, where these markets want to go, I'd do even better. So,
yeah. So let's get into it a little bit. What does the name mean of your firm, and where'd you come up with the name?
Well, the name Availeth, it comes from the word availed, means to profit or to benefit. And I actually got the name from a passage of Scripture, actually in James 5:16, which is in that Scripture. So that's kind of how we came up with it.
Okay.
So it's as simple as that.
Give us a little history of the firm. You're pretty young, pretty new, out there raising funds, and so give us a little history.
Yeah, we started the firm in June of 2010 and registered as a CTA with the CFTC in October.
Okay.
And all that process, trying to get the disclosure document accepted and everything, we finally got that done in the end of January. And so we have been kind of off and running since January, raising funds. And we're in that managed futures asset class, but I think more importantly, what we do, our strategy is we are trend followers.
Okay.
And, I know the managed future space is littered with trend followers, but it's what we believe in. It's, we don't, trade every day. We're looking for those mid to long-term trends.
Okay.
In the market.
So you guys are, again, kind of in that turtle philosophy. Is that something that you believe in? You kind of follow the turtle method?
Yeah.
Yeah.
Yeah. I mean, it's a little deviation from what they did, but yeah, the philosophy is the same. Yeah.
Excellent. And just for disclosure, you've got your own capital within the fund and trade your own capital within the fund as you're out there raising additional funds.
Right. Exactly.
And do you guys have space in the futures that you trade, or do you trade financial? Do you trade energy, ags, meats, grains, anything that's moving? I mean, give us a little background again on what you're looking at and how you got into the futures side of the game, because again, I think it's a great, I worked in equities and options and I switched over to futures maybe about 8, 9, 10 years ago, and I fully believe in them. So why don't you give us a little, background on how you got into the future side of the business and if in fact you do trade all those vehicles? Yeah,
we actually do. We follow pretty much about every sector out there. We have two different programs, a small and a large program. If you're in the small program, there's only so many markets we can follow, obviously, but we try to cover every sector out there, from ags all the way to interest rates, currencies, and energies, pretty much everything you can think of. So all the major ones. And yeah.
Go ahead.
Oh, okay. And so, that's our belief, is we're just trying to get as many non-correlated markets as we can and, catch that wave, so to speak. So, I believe you're...
I got to ask you this question because you brought up correlation right away, and this was not going to be an early question, but it fits right in here. With everything being correlated so closely right now to the dollar or anti the dollar, as I say, all assets are one right now. The dollar goes up, everything goes down. The dollar goes, the dollar goes down, everything goes up. So, has that changed your historic view of things, or are you just kind of hunkering down and being patient and waiting for your setups?
It's the latter. We're hunkering down, being patient, because I know that correlations change. Right now it is frustrating because, as you know, I can look on my screen behind me, it seems like everything and its brother is down except for T-notes, and the dollar.
T-notes and the dollar, exactly. Yeah. Dollar's up.
Yeah. So but those correlations do change over time, and then they'll go together, and then they'll go apart. So I don't know how anyone would predict, or hey, we're going to be in a heavily correlated mode for a long period of time, so therefore we're going to change what we trade and things like that. And by the time you do that, then they fall out of correlate. Yeah, they change again. So
right.
It's an ever changing process. So basically, what we've in our testing and our real trading and trading before I started managing client money and things like that, we just tried to make sure we had the most robust type of system that we could trade. And we are 100% mechanical, so we don't make discretionary trades whatsoever. And so that's basically what we did. And it's worked over the long run. We do have our drawdowns and things like that. So, no, I mean, long answer to your question, we basically just try to stay patient.
So a couple things you brought in there, mechanical and drawdown. So let's talk about those again.
Sure.
For those that are maybe more interested in what you meant by that. When you say you're fully mechanical, give me an idea of how you go about picking and finding opportunities.
Well, we as being trend followers, we obviously are not trying to time a bottom. We are basically trading breakouts, or if dual moving average crossover suits your fancy, whatever it may be. But obviously, markets have to have been moving up in order for us to go long. But we have our rules in place. We're very rules based. So, if it hits a buy signal, we're long, no questions asked. I'll give you an example on this. The T-notes, we're long T-notes right now. Obviously, as a trend follower, you can look at a chart and go, well, of course you're long T-notes. But everyone and their brother that I would talk to is, are you nuts? Why would you go long T-notes? Interest rates have to go up in the future and all of this kind of stuff. I said, well, hey, I happen to agree with you. From a fundamental side, I probably wouldn't go long. But the system's telling me to go long, so I got to do it. And it's been one of the few markets over the last month or so that has actually kept the accounts afloat. You need those winners while you're taking losses. So that's kind of just an example of how we trade.
So define how you find a trend. As you said, you're not looking to pick a bottom, not looking to nail a top. So what kinds of basic things are you're looking for? A little test, a higher test of a low, a lower test of a high. What other things are you looking at when you're defining that? Hopefully the beginning of a trend, I'm sure, is what you're looking at.
Yeah, we're hoping it's the beginning of a trend, but we have no clue. I mean, we're trading higher highs and lower lows as far as breakouts. Is it do we anticipate trends? We don't anticipate anything.
Right.
I'm the world's worst predictor of anything. But we are just buying higher highs and shorting lower lows is basically what we're doing. So we have filters and things like that in there, but. You said you're really not discretionary. Would you consider yourself, using algos primarily to define your entries? Yeah, I guess you could say that. I mean, that is the buzzword of today, algorithmic and stuff like that. But I don't really consider myself that. But you could say that. I mean, it is very mathematically based. It's very rules based. It's everything is based on the price. Everything from sizing positions to where we place our stops, everything is based on one thing, and that's the price. So
let's talk about that a little bit. How do you size? How do you size a futures position, and how do you manage the size, and how do you manage the risk?
Well, I think you kind of have to take a step back and all the way to the beginning when you're designing a system. You have to, when am I going to enter, when am I going to exit, what markets am I going to track, and how much am I going to risk per trade. Mm-hmm. And when you come up with that little recipe, you have to decide, how much am I willing to lose in order to win. I don't want to get all philosophical here on you, but it's kind of important to take that step back. And it's how I started.
Right.
And, so basically testing, I'm a big believer in computer testing systems. That doesn't necessarily going to tell you what's going to happen in the future, but it can tell you if your system is robust enough to go through the things that we've seen in the last decade.
Yeah. I agree with you, and I happen to favor that type of style, kind of backwards, risk first, and then rewards take care of themselves. I'm not a big believer that 2R, 3R, 4R, and every trade is the same, because every vehicle, especially when you're trading multiple futures, has its own biorhythm and behaves much differently. So. I totally understand where you're coming from. Give us a little background and kind of how you defined yourself as a risk manager, because I always like to say, I want to hire a risk manager first versus a guy who's going to shoot for the stars and hit the home run. So give us a little background on how you came to this business and
Sure.
you started your own CTA.
Well, I started out in equities, peddling the mutual funds and annuities and all that as a kid, and not knowing what I was doing, just did what the bank told me to do. But I found myself getting more interested in markets and how they behaved and how they worked, and just did a ton of reading. Anyone that wants to trade for themselves or trade for clients, I would encourage, do as much reading as you can. Funny enough, and you may know him, but really the book that kind of opened my eyes, that aha moment, as Ed Sekoda might say, was Michael Covell's book, Trend Following.
Yeah.
I picked up that book back in 2004, 2005, I forget what year, but I was like, there's all these guys in there, that I've never heard of that are making a ton of money over time, so that kind of got the ball rolling. And obviously in the Market Wizards books, Jack Schwager's books, one main theme, they all trade differently, but the one main theme was, how much you're going to risk. Make sure you know how much you're going to lose or how much you're willing to lose.
Right.
Don't worry about how much it's going to make you. So that really hit home.
Yeah, I agree. And so, when you're in a position and it's a winner or a loser, but yet your stops haven't, your targets on the stop side, I think, haven't been hit, but you're losing. How do you deal with the psychological shrapnel, as I always like to call it, in dealing with that situation? Because, like you said, you've got a plan. You're not out, and you're losing, and maybe that position's been on your books for a while. How do you work through that process? Because all traders, as you said, it's not really a losing position until you book it. It hasn't hit your risk side. But how do you handle watching that on the books every day?
I think going back and testing was a big plus for me, because if I had just tried to design a system based on, I don't care if Covell put it in his books, or if some of the legendary trend followers, Richard Dennis was sitting right here saying this is what you should do. Right. I wouldn't have trusted it unless I could have seen it happen. Yeah. So when you are in a trade, and just lately we've been in quite a few of them. But when you're in a trade and it's going against you, but it hasn't hit your stop, and you're itching, you're like, I kind of come from, I don't like to hold on to my losers. I'm more of, when I first started out, I was more of cutting it even too early, because I couldn't take that idea of losing, losing was okay, but the amount, I'm like, just cut those losses early. So, but the testing was a big plus for me. Okay. Plus trading, going on to paper trade and then going on to trade your own money. And it was like, if you just let the system do what it does, you may have to take a loss here. You may have to take a loss bigger than what you thought or that you wanted to take when you were itching to pull the trigger. But in the long run, it's going to benefit you by sticking to your system. So.
It's the hardest thing, and I always tell young traders this is, the mettle of any, person when you're trading is, how do you, like you said, dealing with the emotions and the psychology between your ears of taking the loss. And I think there's two things that hold back most traders for me, and it's taking a loss, following your plan, and being patient, the patience piece and waiting. And like you said, trusting in your your methods, and doing that testing, I think you're absolutely right, Todd, is what helps to, get you that comfort level. But every trade has its risk, and I think that's the way I always go into it. Is okay. I know I'm going to lose. I kind of look at it. I know I'm going to lose this much, and I totally am fine with that. Whether it's a day trade, whether it's a swing trade, I know exactly where my max pain point, and I think everybody should define that for themselves. For one guy, it might be a tick. I can only handle scalp. Personally, I like it. I'm like you. I like the broader moves and less is more. I'm really a believer in the trend following, and I think you can take the trend following from an intraday basis, but don't make an intraday trade a swing trade. And so I think you're absolutely right, and I think that's the toughest part. And the toughest part is actually losing money, of course, but sometimes the toughest part is making money and doing it the wrong way.
Yeah, and that's the one thing when you're trading for yourself, you could probably stand drawdowns a little bit more. You mentioned the psychology of this whole thing, and it really does come down. Once you have all the rules in place, you've tested it, you've traded it, all that kind of stuff, it comes down to discipline. It comes down to, are you going to stick to the plan? Because entry's great and exits are great, and yes, your risk is very important, but if you don't have the psychology to stick to it, you may as well scrap it and start over. And the trading for yourself is different than trading for clients. Because
explain that a little bit to me, because I fully agree with you. I've gone from full circle. I've gone from managing my own to managing OPM, as I like to call it, to back the last 5 years just my own money. So what do you mean by that? How it is different?
Well, when you are sitting in front of a prospective client and showing them what you can do, what the system's about, what your company's about, some of them actually laughed at me because they said, "Todd, you're so pessimistic. You're trying to sell me on this company and on this idea, and you're so pessimistic because you keep talking about drawdowns." I said, well, yeah. I said, because the gains will take care of themselves. Maybe I need to tailor my speech a little bit and start talking a little bit more positively. But I firmly believe in drilling that home about we are going to take losses. And
I think this is good. Let's talk about this a little bit, because I used to pitch the same way to customers. And what's interesting is I think it's the right approach, right? You want people who are going to give you their money to understand the risks. And that it's not going to be up every day, and don't look at it every day. Give me a period of time. Give me, lock me in for 3, 5, 7 years, whatever it may be, because that's really where you're going to benefit from this. You're going to get, so talk about that drawdowns. When you're out there talking to somebody, their reaction is what? Like you said, you're going to lose. Yeah.
Yeah. I've gotten a positive feedback from most people. They're like, well, of course you're going to lose, because I think that, after this last decade, they're kind of used to losing in the equity markets. And I said, but, look, don't compare me to the S&P. Don't compare me to any other equities or anything like that. I said, because we do things differently. You're going to look at your statement, and you've given me 5% or 10% of your overall investable assets. And then you're going to look at your other statement and go, well, Todd couldn't beat the S&P. The S&P's killing him right now.
Right.
That's fine. That's one of the reasons you hired me, is because we're non-correlated.
Exactly.
And you need that component. But, you're going to look at that statement and go, oh my word, at one point, I had $100,000. Todd grew it to $100,000, and now it's down to 75 before it goes back up to 150. That's going to happen.
Yep.
How does that make you feel? Can you hang in there? Because even though you can see it every day. We're 100% transparent, but let's face it, clients are busy. They're going to look at their monthly statement. I get to see this every day.
Yeah.
I know the ebb and flow of trading. And
do you guys day trade? Do you guys day trade at all?
No, we don't.
Okay.
We don't. We are I guess I don't know if you can call it position trading, but we are mid to long-term trend followers. So, I mean, our winners, we're looking for winners, over 30 days.
Okay.
So it doesn't always happen that way, but
yeah. So, like you said, you're in a market right now when you're looking at a 60-minute, 240-minute type chart, which I'm sure you play with a lot, along with daily and weeklies. Where you're in this chop zone then for that longer term trade. There's not a lot of trends, as you said, except for you nailed it. I mean, for me, it's 10-year. Yeah, 10-year's been up for the last 3 months straight up, and it's probably again, it's probably matter of fact, I put on a short there at 124 on the ZN. So that's. Do you guys hedge, or do you take straight up or down, or do you do in markets like this? Do you play for the you're selling the straddle. You're playing for no movement.
No, we don't. We don't have any other strategy built inside the system. Now, that's not to say that later on, once assets get built up, we may not, introduce, 5% of the system may be counter trend or something like that to lower volatility.
Yeah.
But, I mean, right now, it's very tough to do that when, you have a minimum investment of $50,000.
Sure.
You really can't do much with that other than your trend following system. So, I mean, we will always be considered trend followers. That's what I believe in.
Yeah.
That's what I've studied. But, I know there are several well-known managers out there that have started to introduce different strategies, counter trend, arbitrage, whatever it may be, into their systems and, lower the volatility, invite the institutional money to come in, so it just depends, but no, we don't have that now.
Have you done any testing on, scale and how big, how big do you think you'd want to get? And, what's kind of a number that you'd be comfortable managing? Is there a number there, or is it, are you pretty open-minded? I mean, are you Paul Tudor Jones possible, 13, 14 bill, or you just want to manage a few $100 million, kind of what's your goal?
It's pretty much the latter there. We would like to stay pretty small. To stay under the radar, really. I mean, you have people out there like David Harding at Winton, managing $20 billion. It's really tough to put on a trade at $20 billion. You have to ease into those things.
Well, to me, that's legging in. You're legging in, legging out. It's really the accordion, style to be trading that kind of money. I do believe there is I'd rather see my money with a manager like yourself who understands risk, understands, that first, and then, like you said, profits take care of themselves. Smaller, more nimble, I think, is always, smaller, more nimble, good back testing, good record. That's what I'm looking for. That's what people, I think, should look for in a manager.
And that's what I think that's what we want to be, is that smaller, more nimble type of manager, because, the last thing I want to do is change my system in order to please the institutions out there. No offense to the institutions, but, the last thing I want is someone telling me, you got to change this, you got to lower this risk, or, don't be trading this market or that market. I don't really want to invite that in. And I know that, managing $20 billion, has got to be a lot of fun if you're charging $220.
Yeah.
But,
turning on the light fun, exactly. Yeah.
Yes. But, I don't really, care to get like that. So.
Well, I suspect that a lot of those guys probably never really thought they'd get there, and money just gets thrown at them. And, you even look at the history of Tudor Jones. I mean, he was small, real small. And then, he blew up, and then he blew up both size-wise, and then he kind of lost control of his core values. Now he's pulled the reins back in and trying to do his core values with that large money, which, as you said, I think there's a scale problem he's going to have with trying to do that. You can't step into the wheat market with a $15-20 billion fund easily. You better maybe be trading weekly charts and not entering and exiting too much. So
there are some. It's funny you mentioned the weekly charts. I mean, I know that there are some trend following managers out there that just trade weekly bars. And they've made a ton of money. So. That could be what you're going to have to do.
Yeah, well, and if again, if you got 100 mil, it's, and you're getting paid on, 2 and 20, you can do it. But, when you're just starting, it's tough. You definitely are not going to be, you got to shorten your time frames. just to get the returns you're going to need. And, but I think everybody's goal, from personally macro, I'd rather trade again less. I'd rather trade daily and weekly, and I enjoy doing that when it's a long trend that's just setting up and starting. It's a real, you put on a small position and really wait it out. And have huge upside. So again, you've basically been in biz for a year. Give us some just some highlights and pitfalls maybe that some folks that are looking at can look at as looking at this as a business model.
Yeah, I was thinking about this just the other day, kind of reflecting back on my year. There's trading, and then there's the business of being a manager. And and what I mean by that is, if anyone decides to become a CTA, they're going to start pulling their hair out because of all the things you have to do that have nothing to do with making money in the markets.
Right.
And I was pretty green. I did have some help, a little bit of hand-holding from, different organizations out there, but really I didn't get brought up in working for a CTA or a hedge fund or anything like that, so I really didn't know what the process was all about. But be prepared to be patient with the regulators, and there are things like performance reporting and accounting and all that kind of stuff that I think when people jump into this business, they don't really think about. But, you need operating capital in order to, even though, it doesn't take a lot to run this type of business, you still have to pay people whether you make money or not, whether you're getting paid or not. So those are things that I think if anyone was asked me, hey, I want to get into this business, can you give me some pointers? Be capitalized.
The similar experience for myself. I was ready to, I was running a short biased equity options fund, 03 through 06, thinking that I'd need 5 years before I really paid myself. And the other thing that I wish I would have done is made my lockup period more than 2 or 3 years for that reason, because it's so difficult to raise money and to do it the right way in the transparent way as you're doing, Todd, and it's a difficult process. And make sure that you give yourself a chance, not only having the operating capital as one piece, but making sure that your customers, as you're doing, Todd, and I think this is great advice, is really explain both sides of the equation, the good times and the bad times, before you get into it. And if they're not interested right away, then it's better to deal with that before they put their money in, and lock them in for longer terms. Do you have what is your holding period? Do you want to hold money for a couple of years with your customers, or are you leaving it a shorter time?
No, I leave it up to them actually, because we do have basically a request that you give us enough time. If you want to withdraw money, whether it be all of it or part of it, give us some time to unwind some positions, things of that nature. But really, it's open. It's open for them. I wanted to be as open and transparent as possible, and I think it's important nowadays, especially after our good buddy Mr. Madoff. People are leery if it's not if it doesn't have FINRA attached to it, or SEC type stuff, they get a little nervous, because let's be frank, the average retail investor has no clue what the CFTC is, even though they have as big of a gun as the SEC. They just don't know, because they're in the shadows. So we are regulated. We're 100% transparent, and if you need your money, you can take it. But I would just ask you to be courteous and let me unwind positions. But no, they can take it pretty much any time they want. And I just want it to be as transparent as possible.
Well, Todd, I want to wish you continued success. We'll be watching. I appreciate you coming on, and you can check out Todd's website now. I guess it is live. Is that correct, Todd?
It is, yes.
www.Availeth Capital. It's AVAILETH Capital.com. And again, we appreciate you coming on and sharing your story, and I'm sure you'll have great success with the program.
Well, I appreciate it, Matt. Thanks for having me.
Okay. Take care.
Thanks. Bye-bye.